The difference between a successful person and others is not a lack of strength, not a lack of knowledge, but rather a lack in will. Vince Lombardi. And Coach Lombardi would know. He helped build up enough winners. Willpower is what it's all about. We ask that you persevere 10 to 15 minutes each and every day the market is open, filling out your daily market worksheet. As you're listening to today's show, which is the weekly review and forecast, you fill out the weekly market worksheet. And when you do a practice trade, you fill out the trade worksheet. If you want to supercharge your training, you do that while you listen to the show and, of course, throughout a practice trade. I'm going to put at the end of today's video, you will see links to all three of those trainings, how to fill out those worksheets. You'll also notice in your show notes every day for subscribers, they're PDFs to the daily market, weekly market, and trade worksheet. If you're not a subscriber, go to chartingwealth.com and sign up. Besides getting those worksheets available every day, you can print out and fill in. You also get our daily trainings. And today, market timing doesn't work. Oh, really? And we talk about how on a daily basis we watch the magic of the weekly vertical crossovers. To learn more about that, follow us each and every day. Also, buy the book, Patreon members. Don't forget that first Wednesday in July, we will have our monthly question and answer call-in session. Plus, Patreon members, you got your 10 weekly vertical crossovers. Well, I think there were 7 going up and 13 going down, making for a total we try to get out to you each and every week of 20. Now, let's jump into these charts. Stocks are mixed. The S&P up, the Nasdaq 100 down, bonds down, gold up, Bitcoin down. Let's jump into and focus on what happened this week as we glance at our S&P 500 chart as reflected by SPY, the Spider's S&P 500 Trust Series exchange traded fund that tracks the stocks in the S&P 500. We see a sideways slide underway, things moving up a little bit, but look at the price percent oscillator. Continues to be negative. It is flat, sliding sideways. Derivative oscillator gaining downward momentum. But as we look at things, you can see that we did not move above as far as the candle body itself, where things were back on the week ending the 11th of June. The high there was 424.63. Now the high this week, 427.09, so we did touch a higher mark, did the same last week with higher than that past big green open box candle. When we look at the low this week, we can see we went all the way down to 415.93. So again, price percent oscillator gaining downward momentum, flat. Derivative oscillator gaining downward momentum, still negative. We still have that negative overhang. What do we see on the 2-day chart? It also is negative, even though we see things popping up on this latest 2-day candle representing Thursday the 24th and Friday the 25th of June. Nice big green up candle, still not enough momentum for a crossover. We see that the derivative oscillator has gone positive again. It was positive for a while, went negative on the last 2-day chart. That was Tuesday the 22nd and Wednesday the 23rd of June, but not enough energy to switch over on the price percent oscillator, but the derivative oscillator did go positive. What's up with the half day? That, of course, crossed over, going up back on the morning of Wednesday the 23rd. Went sideways that afternoon, and for the last 2 days, Thursday and Friday, been going up quite nicely. So we'll continue to watch and see where things are. We still have this divergence underway. We just don't see our indicator willing to go as high as stocks are, which is telling you again there's some inherent weakness in that. With the slowdown in the up movement, the devolution that you see, that is showing you that divergence that typically what we see from reading charts is that does not stand in the long term. So we are staying away from where the market is right now. Let's go to the Qs. What's happening there? Did we have the weekly vertical crossover? We did not. If you look, you can see 3.23, and the exponential average 8-period moving line is what? 3.24. So we see that the moving average is, again, still higher than the price percent oscillator, so we don't have a crossover. We do have an up week. The derivative oscillator is gaining upward momentum and has gone green, but not enough energy to cross over. That divergence, again, as we look at where things are, the divergence is still underway. Also, on the Nasdaq 100, what about that 2-day chart? Well, it crossed over going up back on the 7th of June and has pretty much gone up unabated since then, just climbing higher and higher. And we're hoping we would see things pull around, but not enough energy to do it. Let's look at the half-day chart. It crossed back over going up in the afternoon on Tuesday the 22nd, went up until Thursday afternoon where it started losing some of that momentum and devolving on Friday, down 0.12% for the day. Little red candle forming there at the end. Didn't cross over going down. Derivative oscillator also still positive. So just keep your powder dry. Pay attention. Don't want to be jumping in when you don't have enough energy. Now, let's leave stocks, go to bonds. Bonds down for the day 1.04%. This has been a week of a slowdown, had 2 good weeks of up movement, the week ending the 11th of June and the week ending the 18th of June. But this past week, we have a red open box candle not having a higher high, and that's a slowdown. That red open box means a slowdown in the up movement. Derivative oscillator gaining some momentum, price percent oscillator losing some momentum. You can see it's not heading up at the same angle that the blue price percent oscillator line had been heading up. We look at the 2-day chart. What do we see there? We see where things peaked most recently back on Monday the 21st. What happened Tuesday, Wednesday, Thursday, Friday? Red spinning tops. Price percent oscillator flattening. Derivative oscillator losing energy. Price moving through the 2-day trend line. Half-day chart. What do we see there? Crossed over going down in the afternoon on Tuesday. Slid sideways Wednesday, up a little Thursday, and then dropping off on Friday. So that's where we are with bonds. And again, we'll continue to watch and see where bonds are going to go. But we still have the weekly up and the 2-day up, though weakening. Now, in bonds, again, we're down the most for the day. Well, of course, next to Bitcoin, 1.04%. Bitcoin down 3.3%. Let's go to gold next. On that weekly chart, second down week in gold, not reaching a lower low, but a lower candle. Didn't have a crossover, getting very close to crossing over going down on the weekly chart. Derivative oscillator still devolving too and losing energy, still positive but heading down. Might have a crossover this next week. But look at what gold has done lately on the 2-day chart. It's really, perhaps is it finding a floor somewhere around that 166 mark? Maybe. But that price percent oscillator is still going down, as is the derivative oscillator. It could be just digesting those losses, getting ready to roll over again. We'll wait and see. No action we have to take right now. Again, the weekly is up still. The 2-day is down. Might have a weekly vertical crossover going down at the end of this coming week. What's up with the half day? That's where you can really see this sideways slide going on. Like we said, gold up a little bit at the end of the day, 0.33% or for the day. Derivative oscillator still positive on that half-day chart. Price percent oscillator heading up. That's where we are on gold. That's where we are on our 4 big charts. The S&P, the Nasdaq 100, 20-year bonds, and gold. Lastly, we will go to Bitcoin. Bitcoin down for the day, 3.30%. Now again, we can see Bitcoin has reached its most recent low this week, 30,221.76. Derivative oscillator still negative, losing some downward momentum, but that price percent oscillator still heading down. Where is Bitcoin going to stop its down movement? Don't know. We saw it sort of test somewhere around the $38,000 mark, something like that. And then it just fell off there, up a little, and then of course rotated on over, hitting that low on the Tuesday, Wednesday time frame of this past week of the 30,221.76. What do we see as far as the latest 2-day candle goes? Green, solid green candle means a slowdown in the down movement. Didn't hit that low again. Price percent oscillator still negative and heading down. Derivative oscillator losing some momentum. We look at that half-day chart. We can again see where that low was reached. That was on Tuesday afternoon and then popped up on Wednesday and then, of course, sort of slid along Thursday and heading down on Friday. Derivative oscillator still positive. Price percent oscillator negative. So again, lots of downward pressure on both the 2-day and the weekly on Bitcoin. If you're interested in Bitcoin, follow it with us every day along with these other charts. Practice trade it when it offers you an opportunity. That's where we are, folks, as we end the day. Thank you again so much for your support. If you don't have our book, you want to support us, we have an autographed copy waiting for you. Just follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.